Okay, so good morning, East Africa. Good morning, my good people. Good morning, FX Pesa family. I'm Prince Maximilian, because you call me Kakataifa. Today is Wednesday, and as usual, I think you know that every Wednesday, I'm always here to make sure that I'm sharing the market insights. I'm sharing whatever is likely to happen in these markets, and I'm quite very sure that we are going to learn a lot today. But before we can proceed with this session, I want to remind you that this session is fully sponsored by FX Pesa. So if you're here, remember that you have to trade with the best, and the best is FX Pesa. So if you don't have your trading account, you can just go to any browser and browse at fxpesa.com and open your trading account today. But before I forget, there is 100% welcome bonus on the first deposit. So you can get 100% of what you have deposited if you are just getting started with FX Pesa. But apart from that, I'm quite very sure that there are people here who are beginners, you're just getting started. We have the mentorship sessions, which are very well designed for those people who are beginners. We have the 8 p.m. session, very well designed, so that you can learn from 8 to somewhere. But apart from that, there are people who are intermediate here and pro traders. Those people who really want to get strategies, those people who really want to get market insights, this session, the 11 a.m. session, is a good fit. Is a good fit for you. So if you're here, we are going to analyze the charts. We are going to analyze the markets. We are going to spot out trading opportunities. And of course, you can also take advantage of that. But remember, everything that we are going to share here, everything that you're going to discuss in this session, they are quite for education purpose. You see, before you make any trading decision, make sure that you have more confluences that are supporting that trading decision. Okay, so there are people who are saying that they cannot hear me. Guys, can you hear me? This is Bishweka Marceline is saying that he cannot hear. Guys, please, if you're hearing me, just write on chat. Yes, loud and clear. So I think she has to maybe rectify something so that she can hear, he or she can hear me. I don't know if she or he. So I think we are clear. So when we speak about trading is either buying or selling. You're going to make a buy or sell decision. But as I'm always saying here, that you won't just assume and buy or sell. You must have a lot of reasons that are supporting that trading decision. And of course, we always get these reasons by analyzing these markets. And we do analyze these markets in different perspectives. You have to analyze these markets by making sure that you put into account all external factors that are always affecting these markets. And here we speak about all social, economic, and political factors that are always affecting these markets that you're going to trade. And here we speak about news, you see. So you as a trader or someone who wants to make a trading decision, someone who wants to trade, you also have to know if there is any external factor which is going to affect these markets that you're going to trade specifically today. So the good thing about this, we have different calendars where you can go and check if there is any information which is likely to affect these markets that you're going to trade. So in this session, we're going to pass through and see if there is any information which is likely to affect these markets today. Of course, today is 21st of January. We are heading at the end of this month. So we are going to check in the calendar if there is anything which is likely to affect the markets. And of course, the good thing about these calendars, you're going to see the exactly time, the exactly date, the exactly date, the exactly time, the currency which is going to be affected, the impact expected from those informations, but also you get the previous data, the last time when that information was released, but also what these people are forecasting. So the impact of that information specifically will depend on whether it came out positive or negative, depending on the specific information. So we are starting with the first side of market analysis. And here we speak about fundamentals. We speak about fundamental analysis. And in fundamental analysis, you're going to deal with all those external factors that are going to affect these markets that you are going to trade. And of course, we speak about social, economic, and political factors that are always affecting these markets, you see. So we are going to check in the calendar if there is anything. We are going to see it here. We're going to discuss it together, the exactly time, the impact expected, what, let's say, they are forecasting and something like that. So let me display something here so that we can start from there. And always, I'm always recommending Forex Factory as your calendar because it is very easy, it is user friendly, so anyone can just use Forex Factory and see exactly what is likely to happen in the markets. So from Forex Factory, today is Wednesday. I think you can see it is January 21st. So today, very early in the morning, we had GBP CPI. You see, we had GBP CPI, and of course, it has affected the GBP. It had very big impact, and of course, the source of CPI, of course, it is the Office of National Statistics, and it measures the change in the price of goods and services purchased by consumers. And of course, CPI excludes food and energy, you see. And the effect from this, actual greater than forecast, is good for the currency. And of course, CPI is always being released monthly, about 16 days after the month end. And the next GBP CPI is going to be on February 18th, you see. Actual greater than forecast is good for the currency. Now, we always refer to this data here. Sorry. We always refer to this data here. We always refer to this data here. As you can see, for the last month, CPI, GBP CPI came out at 3.2%. And they are forecasting, expecting that it has to increase to 3.3%. And the actual number has come greater than what they were forecasting. So it is 3.4%. So this was good for GBP. So right now it is 11 a.m. So if GBP CPI was positive, there is a very big possibility of experiencing a bullish GBP today. You see, there is that big possibility of experiencing a bullish GBP today. So for anyone trading, let's say GBPJPY, trading, let's say GBPUSD, let's say trading GBP card, there is a very big possibility of us experiencing that market heading upward. You see, that was the first information, of course, which is already passed. But apart from that, we have something here. Day 3, all currencies are going to be affected. And of course, this impact also has the high impact expected. It is WEF annual meetings. So let us go and check the source of this and see. So the source of this is World Economic Forum. Okay. So it is being done annually. Let me check about this. WEF annual meeting are held in Davos and attended by central bankers, prime ministers, finance ministers, trade ministers, and business leaders from over 90 countries. Most meetings are open to the press and officially usually talk with reporters throughout the day. Comments from central bankers and other influential officials can create a significant market volatility, you see. So we also, today we have something, it is day 3. So these people have the annual meeting. And as you can see that different important people in the economy, in the world, they have their meeting. So there is a very big possibility of us experiencing some volatilities depending on the speeches that they are going to give out. So if a trader looking for to trade today, be very keen because there are people speaking here and there, you see. So which can affect this, the currencies that you're going to trade or the markets that you're going to trade. But later at 3:30 p.m., we have the other information. It is going to affect the US dollar. And of course, I think you know the big man will be in house. And this is President Trump is going to speak, you see. So later, I think you know, anything which comes from Trump's mind can shake the market, you see, can shake the markets. There are people who are saying that, let's say if Trump says something, there is a very big possibility of you seeing, let's say, gold going up and or let's say going down, you see. So if you're a trader looking for to trade today, remember that President Trump is going to be speaking at 3:30 p.m. So also, I think you can see from the calendar. But later, we'll have also at 5 p.m. These are pending home sales. But also, of course, these are very, very small informations. But for those big ones, I think you can see we have this one, the WEF annual meetings, but also President Trump will be speaking today. So if you're a trader looking for to trade today, these are external factors which are likely to affect these markets that you are going to trade today. See? So if you are trading anything related, let's say to USD, anything related to Trump, then you have to be very, very keen. See? There is one information here. Okay, this is Trump on land. Okay, let's help Greenland. You'll find, okay, so that's about Greenland. But apart from that, guys, when we speak about external factors, we always look at the calendar. And if there is any information which is likely to affect these markets that you're going to trade, then you have to be very, very keen. But there are people who are fundamental traders. And these people are always taking advantage of the volatility which is always being caused by these external factors or these external informations or these informations. You see, these are fundamental traders. And if you're a fundamental trader looking for to take advantage of the volatility which is going to be caused by external factors, here they are. The exactly time, the exactly date, the currencies which are going to be, let's say, affected, they're here. So you can take advantage of that. But apart from that, there are people who don't want these huge spikes here and there. They want to trade in a market where there is a very calm condition. And these are traders who trade under normal market conditions. Of course, people who are trading fluctuations of these prices, buying or going long expecting the prices to go up, going short expecting the prices to drop, you see, so that they can take advantage of the pips that the market moves. So if you're a trader who trades under normal market conditions, you must make sure that if you have any running trade, it has a stop loss so that you can protect your capital. So that you can protect your capital. Because we all know that these external factors, once their data are released, they are always causing a very huge impact in the market. You see a very huge spike within a fraction of a second. So if it is on your side, if it is on your favor, you are likely to get money. But if it is against you, you are likely to lose money. So that's why I'm saying that you have to make sure that all your orders have the stop loss. So that's what we have on the side of fundamentals. I'm quite very sure that everyone is clear about this. The second side of market analysis is all about analyzing the charts. You have to go to the charts, spot out the trading opportunities, spot out the right area where you're likely to get your long or short trades so that you can proceed with the trading. And of course, you must have the strategy. You must know on how to analyze the charts. You must know on how to spot out your trading opportunities. And of course, in this session, I'm also going to share the tentative directions of whatever you want me to analyze, so you can feel free and write on the chart anything that you really want to see here being analyzed. I'm going to analyze it here together so that we can share the tentative directions of these markets. But remember that everything that I'm going to share here, it is just for education purpose. Before you make any trading decision, make sure that you have more confluences so that you can make the right trading decision. So feel free to write for me on the chat and I'm going to analyze it together. Okay. Okay, thank you so much for sharing. I can see everyone here sharing. Okay, so this is Ian. What is your view on Bitcoin market? Of course, you're going to see. Okay, this is Maria Nzioki. Hello, which economic calendar is that? That was Forex Factory. Okay, not 4:30. Of course, it is 4:30. My time was lagging a little bit behind. Okay, this is Kevin. EU, Euro USD, AUDUSD. Okay, GBPUSD. Okay, Bitcoin Gold, NZDJPY. Okay, how to deposit money in my FX Pesa account. It is very easy. You just go to your account, you just press, you press deposit. You'll see different means of deposit. You see, you can just use mobile payments. You see, how, let's say, M-Pesa and others. But apart from that, you can also use, let's say, crypto, bank, and other means. Okay, so let us start with AUDUSD, AUDUSD. Start with AUDUSD. Of course, this was my trade today morning, where I'm trading out card. Of course, you can see it is moving. So let's go and analyze AUDUSD. Okay, so specifically, once you open the charts like this, you must have a clear definition of which type of a trader you are. We have different kinds of traders. We have different types of traders. We have scalpers, we have intradays, but also we have swing traders. So I'm going to analyze AUDUSD as a day trader. You see, day trader, someone who wakes up every day, opens the charts, and once he or she gets the trading opportunity, she won't hold those trades for more than a day. You see, so I'm going to analyze this, and I'm always recommending that if you're a day trader, at least if you're anticipating, you have to anticipate at least no more than 100 pips in that specific currency pair that you're going to trade. Let's say if you're trading majors and minor currency pairs, let you anticipate, let's say 50 to 100 pips. They're quite very enough for you to get per day. So we always do something called top-down analysis, analyzing these charts, starting from the higher time frames, going to the lower time frames. And specifically on the higher time frames, we are always coming to check the general direction of that market. Let's say, for example, if you look at this, our USD has been bullish for a long time. Starting from January 2025 up to date, this market has been trending upward. So we are in a market where Australian dollar is stronger compared to USD. So we have a bullish market on our USD. Let me mark some areas here which can play out as my potential areas as I just go to the lower time frames. But apart from that, if this bullish rally continues, you see, there is a very big possibility of us seeing this market touching around 0.6, 0.65, 0.69598 around this area, you see. So I'm going to create that as a zone, because if the market continues pushing upward, there is a very big possibility of us experiencing this market at least touching that area. But apart from that, for this bullish move, we all know that you won't just conclude and say that I'm going to buy or I'm going to sell because the market is just bullish. You are going to buy if the market is on a right place or to give you a buying opportunity, or you are going to sell if the market gives you the right opportunity to sell. Because remember, let's say if you're a day trader looking for to get 100 pips, just a bullish move, the moment from here up to here, these are more than, let's say 100 pips, or the movement, the bearish move from here up to here, these are more than 100 pips. So from the higher time frames, you just get the general direction of that market. So we can agree to each other that AUDUSD is dominated by buyers. So AUDUSD is bullish, you see. So if AUDUSD is bullish, then you have to go and see if we can get that. If we can, okay, there is something here. Let me mark this area also. Let me also mark this zone. Let me mark this area here. It can make sense as we go to the lower time frames, because it is the most recent area where the market is likely to reach. You see, around that area. So let me mark it, because you can see the market was started on this area. We had this very huge sell-off. The market came on the same area. We had a little bit of sell-off. On the same area, the market bounced back. So there is a very big possibility if the market touches on that area before it reaches on that zone, then there is a very big possibility of us experiencing a little bit of the drop that market. So we all know that if the market is trending upward, the market will be giving you market structures which are bullish. And the bullish characteristics is when the market is giving you clear high highs and high lows, something like that, you see? And you won't see that if you won't start going to the lower time frames. Now here is when we speak about top-down analysis, analyzing your charts, starting from the higher time frames, going to the lower time frames. So from the monthly time frame, we just go to the weekly time frame and see if we can see other potential areas. So from the monthly time frame, we just push to the weekly time frame. I think you can see clearly how this market was bullish, how this market was heading upward. Though we had a little bit of something which was not clear here, but as you can see, generally this market was heading upward. See, generally that market was heading upward. So on a weekly time frame, at least I can add some zones which can play out as my potential areas as I go to the lower time frames. But as you can see, we are on a bullish rally where the market is giving us clear high highs and high lows heading upward. And why did I mark this zone? I marked this zone because the market is likely to reach at least on that zone, because the movement from where the market is currently up to here, these are almost like 100 pips. So we are likely to get that bullish move, and then we catch our 100 pips and go away. But on the same area, if the market decides to go down, then the next move where the market is likely to reach is around here, you see, where you can attain also those 100 pips. So now, in order for you to trade that market, you have to make sure that you focus more where the market is currently on this area. I think you can see clearly that the market was heading upward. So there is a very big possibility as we go to the lower time frame, specifically starting from the daily time frame, we are going to find this market giving us clear high highs and high lows, showing us that buyers have much power compared to the sellers who are present. So from there, you just go to the daily time frame and focus much on that area. And I think you can see how clear bullish the market is. See, the market is giving us clear high highs and high lows, though we had a very huge bullish rally where the market gave us this high, this was low, this was high, this was high low. I think you can see the market was retracing on this same area, and now the market is heading that way. See, so let me mark this area. As we go to the 4-hour time frame, we are going to see, or we are going to know exactly what the market is doing. I think you can see the market failed to break this area because it is bullish. You see, not only there, our last high is somewhere here, and the market has already broken that area. So there is a very big possibility, because the market is on its bullish rally, for us to see this market heading upward, at least up to this zone here. And that zone, we just mark that zone from the higher time frames. I think you can see the area where we are likely to get something. It once started on that area. We had a sell-off of these were over 180 pips. You see, almost on the same area, the market had a sell-off of over, let's say, 300 pips. On the same area, the market had a sell-off of over, let's say, these are 400 pips. So there is a very big possibility. If the market gives us a bullish move up to this zone, then we can also, from that zone, get a little bit of selling opportunity, you see. But right now, the market is here, so we have to go and focus much on the area where the market is and see if we can get that continuation move of that bullish rally. So from here, we just go to the 4-hour time frame, and as you can check, or as you can look at this, the market is giving us clear high, low, high, and of course with a little bit of consolidations, but bullish consolidation. So there is a very big possibility of us experiencing this market continuing pushing upward, because as you can see, the market gave us a little bit of course, it is a continuation chart pattern. The market has already broken that area. As we go to the lower time frame, we'll be just looking for a little bit of retracement, and then this market has continued pushing upward that way. You see, that way. So as we go to the 1-hour time frame, I think you can see more. We can get more more confirmations. And I think you can see on 1 hour time frame that the market was giving us clear high, low, high, low, high, and of course this consolidation here. The market broke that consolidation, so we have to get this market coming back a little bit down. Then from there, we just push upward. So guys, that's what I see clearly on AUDUSD. And if this market continues pushing upward, the most probable area where the market is likely to reach after breaking this zone, here, this zone here, this area here, this zone here, the next stop is around this zone. See, the next stop is around that zone. And there is a very big possibility. Let me show you something here. This movement from here up to here, before that consolidation, the market will move the same movement after completion of that consolidation. Then after that, we can get a little bit of retracement. I think you can see it is on the same zone, this one here. You see, this one here. Then after that, we can get a little bit of retracement, and then the market can break and continue pushing upward that way. So that's what I see clearly on AUDUSD. So that's what I see. On AUDUSD. Okay, this is a Sharon Nyambura wants me to analyze GBPUSD, and this is a Miriam Waithaka also wants GBPUSD. So let's go to GBPUSD and see what is likely to happen. GBPUSD has been bullish for the past 12 months. The past 12 months, we had a very huge bullish rally on GBPUSD, you see. Then after that, I think you can see, let me show you something here. After that, for the past 6 months, we had a little bit of a selling GBPUSD because the market had a little bit of consolidation and something like that. But I think you can see, we were expecting that this market has to buy starting from this area. I think you can see, you see, so we had a buy trade, though because of Trump trying to acquire Greenland, the market opened with this very huge gap going down. But later, it was because of fundamentals. That's why the market opened with this gap. But our anticipation was very, very clear. We're expecting that this market has to push at least with reaching on this zone here. And then after that, the market has to reject a little bit. I think you can see how the market went up to this zone. And then you had a little bit of rejection, though it refused to continue pushing down, but it rejected here. Then it continued pushing up at that. So I'm going to delete it and everything so that we can start analyzing afresh and see what is likely to happen on GBPUSD. So starting from the monthly time frame, GBPUSD for last year, for the first 6 months, we had a very huge bullish GBP against the dollar. You see, that's why this market moved around, starting from 1.20803 up to, let's say this was 1.38073. So we had a very huge bullish movement for the past year. For last year, for the first 6 months of last year. And then the last 6 months of last year, you see, we had a little bit of a bearish move around this area. I think you can see, sellers had much power compared to the buyers who are trying to push this market upward. See, but the market did not have that big volatility, because if sellers had that much power, we would have seen this market coming back down. But as you can see, that the market was just ranging around this area. So there is a very big possibility that for the past 6 months, the power of buyers and sellers were almost equal. That's why the market just moved. The range, this is the range of, let me check how many pips are these. This was the range of 800 pips, you see, even not 1,000 pips. So specifically, if you're going to trade this, or if you're going to deal with GBPUSD, there is an area here where the market has been rejecting for a long time. And that's where the market almost is, you see. So I'm also going to create something here. I'm going also to create a zone around this area so that as we go to the other time frames, it's going to help us in one way or the other, see. But specifically, the movement from last year, the movement from here going upward, this was pure bullish. The market was bullish. And then after that, we can see that the market had a little bit of rejection. These are bearish engulfing candle. The market came back to retest, and then It's just consolidated around this area. So we have to go and see if we can get our 100 pips, or let's say 50 to 100 pips on GBPUSD today. Despite the direction, the market can give you a bullish move or let's say bearish move. You won't just conclude because of the high time frames. So let's say if you are looking for 100 pips, just the moment from where the market is currently, let's say up to here, these are more than 100 pips. Or if you get a selling opportunity, the moment from here up to here, these are also more than 100 pips. So you as a trader, you can get something from here. You see, you can get something from here. So we do top-down analysis so that you can see exactly what is going on right now on GBPUSD. You see? So let me also shade this area as we go to the lower time frames. We can also know exactly what is going on around that area. So from the monthly time frame, you just go to the weekly time frame. And on a weekly time frame, I think you can see how clear this market was. It had a very huge bullish rally where the market was creating clear highs and high lows. Of course, giving us, this market was moving on a channel. You see, it was a bullish channel. I think you can see very, very clean market structures. The market was giving us clear highs and high lows. I think you can see clearly, you see. But after that, you can see that the market failed to continue giving us those clear highs and high lows, you see. Then the market gave us a little bit of selling pressure here. Then the market came back again, sold again, and the market is almost on the same area where some people are likely also to get a selling opportunity around that area because the market has been rejecting on this zone, you see, for a long time. Try to imagine the area that caused sellers to push this market down over 500 pips. On the same area, the market failed to break that zone for almost 1, 2, 3, 4, 5 weeks. This is the whole month. The market was failing to break that area. So there is a very big possibility of us seeing a little bit of rejection. I think you can see the rejection has already happened. The market has pushed it down over 200 pips, you see, because of that zone. Not only there, I can also spot out the area on a weekly time frame, this area here. It can make some sense as we go to the lower time frames, because if this market decides to come back again down, then this has to be your target. You see, this has to be your target. Guys, bear in mind, this is the weekly time frame. You're just looking for 100 pips, or let's say 50 to 100 pips. Just the moment from here up to here, these are 100 pips. Or the moment from here up to here, these are more than 100 pips. So you come to realize that you have to focus much on the area where the market is currently, on this area here, where the market is currently. You see, we had a very bullish move. The market is spent over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. You see, moving upward. So the market was dominated by buyers for over 10 weeks for those people who are trading GBPUSD. But where the market is currently, it has been dominated by sellers for the past 3 weeks, 1, 2, 3. So in reality, if you are going to trade GBPUSD, right now, you're in the market where for the past 3 weeks, the market was dominated by sellers. But putting aside this week where the market has showed us a little bit of bullish move. So as we go to the lower time frames, this is a clear highs and high lows because the market was dominated by buyers. But right now, we are going to find this market giving us bearish characteristics where the market has to create clear lower lows and lower highs. So from here, you just go to the daily time frame and you are going to see that in a very clear and easy way. I think everyone can see how beautiful these market structures are, how this market was giving us clear bullish move. You see, I think you can see, even if you just put your trend line here, the market was just ranging that way. You see, the market had a very huge bullish rally where the market was giving us clear high highs and high lows, clear high highs and high lows, breaking structures and coming back to retrace, breaking structures and coming back to retrace, breaking structures, and the market failed to continue breaking structures and coming back, or meaning breaking upward structures and coming back to retrace. The market gave us something like this. So from what you see, these are past 3 weeks where the market was dominated by sellers. That's why this market was giving us something like this. There is a very big possibility of us experiencing something like this for those people who are trading GBPUSD. But you as a trader, remember, you have to know the exactly position where you are likely to get your sell trades. Let's say for anyone trading GBPUSD, the market gave us low, this was high, this was lower low, and of course this was clear lower high, you see. So if you are thinking about going short, the zone where the market is currently is the right zone for someone to get a short trade because it is on its supply zone. And it is on its supply zone because the market once started on that area, we saw this market moving down over 150 pips, you see. And for those people who trade price action, speaking about break and retest, the market created low, created high. This was lower low. So our last low was somewhere here. So for the normal retest, where the market comes back to retest the previous high, the market had to do something like this. You see, the market had to create something like this. This was low, this was high, this was lower low, this was lower high. The market came back to retest around this zone. You see, okay, sorry guys, let's continue. Let's proceed with this. So specifically, what I'm just speaking about is that you as a trader, you also have to know on how you can trade a bearish or a bullish market. So for this market, which was heading upward, the market started from here. It created low. This was high. This was lower low. This was lower high. The market came back to retest normal around this area. And this was lower low. And the market came back to retest fully. So there is a very big possibility for anyone trading GBPUSD today to see this market giving us a little bit of a selling pressure, selling market. And of course, you have to know exactly where the market is heading to. Let's say, for example, this area can play out as your target. This area here can play out as your target. So now I have to go and see if sellers are there, because you won't just sell because the market has reached on the area where you are likely to get the selling opportunity. You have to see sellers entering. And of course, this market, starting from Monday, the market has been pushing upward. We saw this market heading upward, leaving a little bit of imbalance here. The market was, during the open of the market opened with a very huge gap, and that gap was covered everywhere except on gold. But at least I think you can see the market was dominated by buyers. So these are buyers trying to push this market upward. And if there are buyers trying to push this market upward, we have to see their dominance coming to an end. If sellers are going to take over, we have to see the buying pressure is coming to an end. And how are you going to see that? That's why we talk about top-down analysis. Just switch to the lower time frames. From the daily, you just go to the 4-hour time frame and see exactly what is going on. You see? And I think you can see clearly that the market is on the zone where once the market touched there, it had a sell-off of over 150 pips. And that's where the market is. And I think you can see the market has already rejected over these are more than, let's say, 60 pips. So for anyone who was here, who knew exactly what the market is doing, I'm quite very sure it would have caught these 60 pips. So now we have to see if there are sellers present or buyers are still dominant around this area. You see, let's say from the 4-hour time frame, if you look at candlesticks, you see, at these candlesticks, you can see a little bit of selling pressure, but very, very small selling pressure. You see, let me mark this zone here. For the market which was heading upward, of course, it was giving us clear highs, lows, high highs, of course, high low, high high, and high low. Where the market is currently, it is on the zone where buyers are favored. Where buyers are favored. That's why you can see this market trying to reject a little bit. You see, that's why you can see the market failing to break this area. These are 4-hour time frames for almost 1, 2, 3, 4, 5, 6. 6 times 4. These are 24. 24 hours. The market has failed to break this area. There is a very big possibility of us today seeing this market failing again to break. It can push a little bit upward, something like that. You see, now if you want to see clear reversal candlesticks around this area, you can just go to the 1-hour time frame and confirm more to see if this bullish movement has come to an end, or we still have a little bit of a bullish move where the market can move a little bit upward. See, where the market can move a little bit upward. So something like this. So as we go to the lower time frame, specifically 1-hour time frame, we are going to focus on the candlesticks which are present here. We are going to see if this market is giving us a little bit of bearish characteristics because the market is on the zone. If we won't see that, we won't just conclude and sell because the market is on the area where we are likely to get a little bit of a bullish move. So from there, just go to the 1-hour time frame. And on 1-hour time frame, I think you can see clearly how this market was moving. You see, considering this as high, low, something like this. This was high, and this was high, low. Just put aside these fundamentals which affected this market. Just consider this one here. You see, the movement from here created high. This was high, low. This was high, and the market came back inside here. So there is a very big possibility where the market is currently, at least to give us a little bit of bullish move. See, so this is not the right area for someone looking for to sell around this area. It won't be a good trading decision. It won't be a good trading decision. If you're looking for to sell this, at least wait for this market to push a little bit upward, at least come back around this zone, you see. And that's where you can think about going short, because generally this market has to give a little bit of a selling market. But otherwise, there is a very big possibility of this market to give us a little bit of a push, and at least the market to reach around this zone. And then from there, that's where you can think about going short on GBPUSD. See, short on GBPUSD. So that's what I see clearly at that. Okay, that's GBPUSD. Okay, that's GBPUSD. Let us look for any other last mini analysis so that we can check what is likely to happen around that area. You see. Yeah, I think Emmanuel has something which said here on the comment, that plus the news match with the short-term narrative of GBPUSD. Yeah, sure. Just the short-term. That's why we are thinking about going a little bit long, but generally GBPUSD has to continue pushing down because I think you can see that the market has reached on the area where this bullish move, a very, very clear bullish move, has come to an end. The market came back to retest. We had this push. The market has come on the same zone. So there is a very big possibility of us experiencing that market pushing down. But from where the market is currently, you won't just conclude and sell. The market has to give you the premium prices where you're likely to get a very good selling opportunity. You see, a very good selling opportunity. So that's what I see clear. Because most of the time, there are people who are trading by using indicators. There are people who are, let's say, adding some indicators here and there, but I always recommend people to read charts. You see, once you clearly understand on how to read charts, trust me, you can trade any market that you want to trade because you know exactly the psychology which is behind the market, the psychology which is behind these charts. So it is going to be very easy for you to analyze these charts in a very easy and simple way. So one more trade so that we can wind up this. Okay, I think we have to go for something new. NZDJPY. And of course, this was Kelvin D. Praise. NZD NZDJPY. Okay, of course, this is going to be the last because almost my time is up. So starting from the higher time frame, specifically the monthly time frame, NZDJPY has been bullish. I think you can see NZDJPY has been bullish. Starting from January last year up to date, this market has been bullish. You see, we have a bullish NZDJPY. So let me mark some potential areas that are likely to give us something as we go to the lower time frames. You see, this area here can give us a little bit of rejection, because I think you can see the market is rejected here for many months. 1, 2, 3, the market was just rejecting around that area. So it is giving us something like this might apply or might play out as our supply zone. See, something like that. So as we go to the lower time frame, it is just going to help us in one way or the other. But if the market continues pushing upward, I think you can see the next move. If this market continues pushing upward, maybe later, maybe after 6 months, or let's say after 1 year, if the market continues pushing upward, you can see this market touching around that area. Okay, let me mark this area. Why did this market just come around that zone and fail to continue pushing upward? And our bullish rally started from this area. But apart from that, also we have another area here where the market rejected a little bit, where sellers pushing this market for almost 2 months, pushing this market down for almost 2 months. And then from there, we just had that bullish move. So you as a day trader looking forward to trade, you can just focus much where the market is currently. And once the market moves around, if it continues pushing upward, then the most probable area where the market is likely to reach is around this area here. I think you can see this candlestick here around this area. And if it continues pushing upward, the next move is on that one. You see this candle, I think you can see after breaking that candle, the market came back to reach us on that area. Of course, from the higher time frames, you won't see them clearly if you don't have experience. But if you have experience, you know exactly that this market was giving us clear high, low, clear high, high, clear high, low, clear high, high, clear high, low. And of course, the market pushing. Starting from there is when we had that bearish move. So if you have a bullish move, then there is a very big possibility if this market starts pushing upward, then those are our demarcations. So from there, you just go to the weekly time frame. And on a weekly time frame, at least you can see how this market was doing. You see, consolidating. And these were 2 months where the market headed downward. But after that, the market continued with its bullish rally, where the market continued creating those clear high, clear low, clear high, high. Of course, there is something clear low, clear high. And currently, the market is on its bullish rally. The market is on its bullish rally, where the market gave us that clear high, high. So I'm going to mark this area also. I'm going to create it as a zone, because this is the area that caused the buyers to enter and to push that market upward. Not only that area, but also this is the recent high where the market led sellers to push a little bit down. You see, a little bit down. So also I can also mark this area, and as we go to the lower time frame, I think it can give us something. So bear in mind that this market is bullish, and we do trade market structures. For the market which is bullish, it has to give you clear high highs and high lows, breaking structures and going upward. How are you going to see that? From the weekly time frame, just go to the daily time frame, and on a daily time frame, you're going to see those clear market structures. I think you can see how this market was giving us very, very beautiful market structures. This was high, this was low, this was high, high, this was high, low. The market had a very huge rally. This was high, high, this was high, low, because it came back to reach us around this area. This was high, high, this was high, low, this was high, high, this was high, low. The market failed to break that area, but I think you can see the market had a bullish rally. Let me mark this area here. Let me mark this zone here. Let me mark this zone here. This area here where the market came back to reach us, but not only there, but also this area where the market can give us a little bit of selling, and then we can think about going long. Because remember, where the market is currently is on the zone, where the market is currently is on the zone, this one here. this zone here. You see, I think you can see it clearly that the market is on its supply zone. That's why you have to mark these areas from the higher time frames. They are going to help you as you go to the lower time frames. So where the market is currently is likely to give us a little bit of a selling opportunity. You see that area. So I think that's why for the past, yesterday and today, I think you can see the market has touched on that area. There is a very big possibility of us seeing that market pushing a little bit down. Now you have to go and confirm if sellers are present, because you won't just force this market to sell, because it can just pass like nothing is happening there. You see, like nothing is happening there. So if the market breaks this area, the next move is somewhere here. The next target has to be somewhere here, because that area was also spotted out from the higher time frames, not here, but very, very far from here. I think you can see around this area here. You see, around that area there. Spotted out from the higher time frames, so it can make more sense as we go to the lower time frames. So specifically, you as a trader going to trade, you also have to know exactly your targets. You see that if the market goes on my side and I get, let's say, a bullish trade, this is going to play out as my target. See, these are the things that every trader outside here, he or she has to know, so that you can trade exactly what you clearly understand. You see, I think you can see how easy it is. So now from here, you just go to the 4-hour time frame and focus much on that area where the market is currently. I think you can see we had this very huge bullish rally. You see, we just had this very huge bullish rally, and after here, I think you can see this market is giving us some sort of consolidations, and it is consolidating because these buyers who are these buyers who are trying to push this market upward have come to an end, because they know exactly that this is the supply zone. That's why they have just closed their trades, and the market is just consolidating around this area. So if this market is just consolidating around that area, then there is a very big possibility of us seeing this market breaking that consolidation, coming back to retest, and then at least coming to this zone, and then it can continue with its bullish rally, something like that. You see, something like that. Now you have to see if sellers are present there. And how are you going to see if sellers are present? You have to look for reversal candlesticks around that area, because sometimes you might find that the market just consolidates around that area, and then after that consolidation, you find that the market breaks that consolidation, and then the market continues pushing upward so that it can reach on its target, which is somewhere here. You see? So now from there, if you just go to the 1-hour time frame, you can see if reversal candlesticks are present. Let's say, for example, this candle here and this one, this is bearish engulfing, and this confirmed that sellers are present. You see? Then the market came back around that area. From what I see and from my experience, there is a very big possibility of us getting a little bit of a selling market, starting from where the market is. And if you are present here, if the market closes below this, then we'll have this market going back down to retrace around this zone, and then from there the market can push that way. See, so clearly that's what I see on NZDJPY. And of course, if you get that short trade, let's say around that area, you have to make sure that your stop loss is above this, because the market can break that area and continue pushing upward, and turn this as a continuation chart pattern. But if it breaks down, then you can think about getting, let's say, 70, 60 pips, or let's say 80 pips, or maybe sometimes 100 pips if the market pushes down over these areas here. You see, over these areas here, this will be more than 100 pips. You can just decide to leave the market once the market touches around that area, and something like that. So you can just risk, let's say, 30 to get 70, which is more than 1:2. So easy and clear. So guys, thank you so much for your time. I hope everyone was here has gained something from this. Guys, remember, everything is fully sponsored by FX Pesa. So if you're to trade, make sure you trade with the best, and the best are here. You see, you learn from the best, but also you trade with the best. Guys, FX Pesa for everybody. I'm Prudence Maximilian. You call me Kaka Taifa. Thank you so much for your time and have a blessed day morning. Bye bye.